Hello and welcome to Inderes TV. Harvia released its Q3 report last week and now I'm here with Analyst Rauli Juva to discuss about the result. Hi Rauli and welcome.
Hi Pia, thanks.
So let's just start with the Q3 report. What was the main takeaway from there?
Well, the main takeaway I think was that the good organic growth continued around 8%, a bit slower than H1, but still quite good. And then the margin was really strong though, so seasonally Q3 is typically the weakest in terms of sales and margin, but now the margin was actually at the same level than in the first half of the year, so that was clearly a positive surprise.
Yeah. But the regions outside Europe continued to show strong growth, while revenue in Northern Europe declined, and growth is expected to be driven outside of Europe.
Yeah.
So is this a sign of market saturation in Europe and especially Northern Europe, or is there still room for growth in these markets as well?
There is room for growth, yes, in two ways I would say in Europe. So there is both clearly the kind of cyclical element that there was a huge demand peak during COVID, and then the COVID ended, and we have talked about this before, but anyway, the COVID ended, and then the inflation and the purchasing power kind of inflation went up and purchasing power down, and then demand went down, and from that perspective, there is now some recovery already in the Central Europe and most likely during the coming years in the Northern Europe as well, and in addition to that, at least in Central Europe, there should be room for kind of a more structural growth when the popularity of saunas increase. But of course, in Northern Europe, like in Finland, where there is already sauna in every apartment, basically, or every other apartment at least, so the structural growth in the market is much less than outside Europe, for example. So yes, room for growth, but more limited than outside Europe.
Of course, yeah, and I assume, especially in Finland and maybe also in Sweden, the construction market, no new builds really, so that's a bit also affecting the
that's definitely market. Affecting no new apartments, and also not that much apartment changes, which would kind of trigger renovation. So that's definitely impacting here, as well as the low purchasing power, since in the Nordics it's a pretty kind of average consumer purchases a sauna, whereas in the other countries it's more maybe a bit of a premium product or a professional kind of product in the like spas and so on. So the customer segment is a bit different as well.
Yeah, exactly. So the company commented that material margin growth was supported by both geographical and product group specific sales distribution. How do you interpret this? What does it actually mean?
Yeah, that means what they have been talking about before as well, with actually continuing on what I just said, that outside Europe that the product is more premium, the price points are higher, and hence you can take a somewhat better margin out of those, and when Harvia is growing quite rapidly outside Europe, and the proportion of US and Asia is increasing, that kind of structurally supports their margins as well. And now we saw a big leap in that in Q3, which is not fully maybe sustainable, but still that's the direction where they are most likely heading, as the outside Europe the growth should continue to be higher than in Europe. So that's the geographical element which is likely to remain there. And then perhaps on the product side it was a bit more maybe temporary, or just some kind of just a fluctuation between the quarters, that there happened to be more of these heaters and less the full saunas, which are a bit lower margin in that sense, when you are just selling kind of wood instead of the actual kind of maybe more advanced things in the control panels or heaters or whatever.
So, but with growth continuing outside Europe, it's going to, at least for a while, be more profitable growth.
That most likely that will be the case, yes. At least on the material margin or gross margin level. But then of course the growth also requires some investments in the sales and marketing side. So on EBIT change is not maybe that big, but anyway, it helps them to kind of continue also Putting investments on the kind of cost investments on the growth.
Yeah. So we discussed this in the last interview. The strategy was updated in May. Was this visible in the report somehow, or was it just business as usual? Did something change through that strategy change?
Yeah, well, nothing much had changed as such. Of course, they were heading in the direction where they want to be heading. So kind of continuing to expand outside Europe and focusing on the main markets. But of course, in one quarter, you don't see that much of a change. One thing, obviously, which I didn't mention is the Thermosol acquisition, which was made in the summer and was now for the first time in the Harvia figures for 2 months, and supporting growth and being definitely one of the kind of strategic elements that they are now in the steam products as well, in addition to the traditional saunas, and then they want to go also to infrared further on. So that's of course a big strategic thing.
Yeah. All right. We have seen Harvia making acquisitions, not accusations, in the past, and you expect more of these going forward. So where do you see most potential for these acquisitions, either geographically or by product group?
Yeah, well, at least they are aiming to do it. Like I said, this steam company in the US was probably the kind of a best strategic fit you could imagine when it comes to acquisitions for Harvia. So that was a very good one, and on top of that, they of course could buy also something on the infrared side if they find something interesting to get more foothold also in that product group. So that's kind of clear. Otherwise, I think it will be maybe more opportunistic and that's maybe smaller one in that sense, that if something comes their way, they could buy it or make some small acquisitions to strengthen a specific market somewhere, but those are not so obvious. So definitely this product group expansion to steam, which was now done, and then further on to infrared, are kind of the very, very clear targets they have.
And that would probably be on the markets where these are more popular or not as...
Yeah, naturally there's also companies kind of available in the markets where infrared are sold in the first place. So yeah, that would be then most likely a US tilted company, but also could be on Central Europe.
Yeah. And then finally, as usual, the valuation and recommendation. Where do we stand at the moment?
Yeah, we continue to be on the negative side, so sell. And that's purely because of the valuation. The company is doing very, very well, and will definitely create value in the long term. So no kind of doubt about that as such. But the valuation is for this year's PE over 30, and next year still over 25. So it's just I'd say a bit too much. It's not overly expensive given the strong growth and returns on capital they are creating. But yeah, that's how we see it at the moment.
Yeah, thank you.
Thank you.
So Harvia still going strong, but quite highish valuation. Read more in the research at Inderes.se.